Hello and welcome to FountainFX on Tuesday 29th of April 2014. I hope you can bear with me. There will be the sound of a dog barking in the background. Neighbours have left him out in the yard all day and the poor dog's been barking all day, so he obviously doesn't like being left on his own, and we all have to suffer. So anyway, if there's a dog barking in the background, you know why, and I can now carry on with the Euro US dollar analysis for the day. Please ignore the dog barking. Anyway, having said that, he's gone quiet. It's incredible. So, looking at the Euro US dollar on the weekly chart, we've been in an uptrend since middle of last year. Price hit this low of around about the 128, and it's been pushing up since then. The one thing to note is that 140 is the area of balance or average value for the euro, which the European, the ECB, likes to have. So price has now got up to it. It seems to be starting to bounce slightly lower, but signs of weakness, but not really moving below this 137. So we've got a new low of the 137 and a high of the 139. Not really a easy currency pair to trade, because it's not really channeling or doing anything at the moment. It just seems to be sort of not moving a lot at all. Look at, I mean, the amount of which price has been moving in the last few weeks has been literally 50 cents up and down. So sorry, 50 points up and down, which is half a cent up and down. So not really a lot. If we go down into the daily, take a look there, we can see that price has actually been falling in terms of the highs. We draw a line from the highs to highs to highs, but then in all honesty it's not been doing a lot in terms of the lows either. So we can actually show that it's creating some form of a triangle. But what I would say is I would recommend that you take a look at this low down here at the 137. It's a significant low, and if we look at the previous high here, the 138.90 area, price hasn't been able to get up to it. If we see here, price has got to this high today, last couple of days at the 138.80. That's been its high, and it's turned and it's fallen quite rapidly. So we've got a very much a bearish engulfing candlestick on the daily chart off this spinning top. Now that should mean that tomorrow we should look, especially as prices closed at or near the low of today, we should be looking for another bearish day. We should look for another down day, continuation in this downtrend with a stop just above the 138.80. But at the moment, with price being as sort of indecisive as it's shown over the last 2 weeks, that may not be the case. We just need to be aware of it in terms of how we trade. But if we go into a smaller time frame, see, as you can tell, the dog's barking again. So we can look and we can see that we've had, yesterday was a very nice area of channeling with the Asian session, a 10 points up and down channel. If I just mark that, we can see that. So we got from 138.14 up to the 138.24, 25. So with the breakout of that, we had a nice, very strong uptrend. The MACD confirmed it in terms of the trade that we could have taken. We've got a high up here. I will just move this ever so slightly just to show the high, which is the 138.80. Just going to get rid of that. So the 138.80 is the high, and so that was really the move yesterday with the European Open, a great move. Today we had to waited really for the US market to have opened at 2 o'clock this afternoon for this big drop that occurred. But prior to that, we can actually see that throughout the Asian session, price rallied back up to this area of resistance where it turned and fell from. So this is another confirmation. Resistance and support is key. These are great areas of entry, trade entry. And if you look, if you'd have placed a sell order at the 138.78 or 79, you wouldn't have actually been filled because of the spread. You'd have had to have taken a trade order around about the 138.75, probably something like that, allowing for spread to have actually got your order filled. So it was that close a trade in terms of how price went. and you'd have had literally no element of risk or no element of price going against you at this point here. So you'd have taken a nice trade this morning with the European Open and it just sold off. You'd be now sitting with 75 down there. You've been sitting with now with 60 points of profit. Yesterday was a nice 40-50 point trade as it rallied from the 138.25. Well, actually 50 points, 138.25 up to the 138.75, and then it's just done the reverse today. So 50 points yesterday, 50 points today. Very nice in terms of what's out there. If we now go down to a lower time frame, the 15-minute, we can see from yesterday's trading, in fact we scroll back, yesterday morning with the Asian session, very nice. We look here, the MACD gave a good confirmation here. So even if we were late in getting in, we would have entered on the next candlestick for a buy, and that would have only lost us probably about 10 points. Let's just see what the price is. 138, 37, 138, 36, something like that. So we'd have still made a good 30 points, 30 to 40 points trade off that opportunity yesterday morning. If we then see confirmation, we have resistance, then comes back up, further resistance before it drops and falls away. And then when price gets back up to it this morning, we can see that it creates dojis and spinning tops. It doesn't want to continue through this area of resistance from which it then falls, and price doesn't get back up to it. So a strong area of resistance. So 138.75 is a good area to sell at, especially as price is now broken and pushed even lower. So they're the things you need to be aware of. Happy trading from FountainFX. All the very best. We'll talk to you tomorrow.